Hey there, I'm Douglas. I've been a corporate guide for 2 years. Today we're going to be discussing net and gross income, as well as how to calculate both and where they should be reported. First, let's get a basic understanding of these words, which are key metrics for tracking the health of your business. First, let's define net and gross income. Gross income is the amount your company has earned minus the cost of goods sold. This is how you determine how much production and labor costs subtract from the profits. And net income, your company's revenue minus its expenses. This is how profitable the company is overall. Now let's talk about what falls under these expenses. Your first one is going to be cost of goods sold. It's the direct cost of manufacturing goods or acquiring goods to sell. Example of this is labor wages, the raw materials, as well as freight and storage costs. Your next one is operating costs, which is the overhead expenses of operating your business. Example of this, which is rent, administrative pay, insurance, and marketing. These costs are not directly related to goods and services, but are necessary for operation. You also have your non-cash expenses, which is a cost your business doesn't pay for in cash. Examples of this is going to be equipment depreciation, resource depletion, as well as stock-based compensation. We have an entire video that goes over non-cash expenses, and it has been linked below if you want more info on that. The last one you have to worry about is going to be your taxes, debts, and interest. And let's talk about how to calculate gross income. You will add up all the revenue your business has earned and any other income. Then subtract direct costs, aka cost of goods sold. So let's give an example. Let's say you have a screen printing business which has $115,000 in sales revenue. You're going to want to go to your cost of goods sold, which is $5,000 in t-shirts, $1,500 of inks and adhesives, as well as $15,000 in part-time assistants, for a total of $21,500. Once you have your sales revenue, you'll minus the cost of goods sold for a total of $93,500 of gross income. Once you have that number, sole prop and single members are going to report that on an individual tax return. And then partnerships report on individual tax returns and IRS Form 1065. Now let's talk about net income. For net income, you're going to want to take your operating costs, which is $24,000 in rent, $7,000 in insurance, as well as $1,750 in advertising, which is total for $32,750. Once you have that number, you'll move on to your debt, interest, and taxes. For example, we have $14,500 of debt and interest, as well as $9,000 in taxes, which is a total of $23,500. After you have your operating costs and your debt and interest and taxes, you'll take your cost of goods sold and add it to the two of those for $77,750 of total expenses. You'll take your sales revenue and minus those total expenses for a total of $37,250 of your net income. Now let's talk about reporting. Gross income is, as we mentioned above, where sole prop and single members report on individual tax return and partnerships report on individual tax return and IRS Form 1065. While net income has more steps for sole props since they are taxes disregarded entities, it will be individual taxes on Schedule C, profit and losses on Schedule 1, and additional income or income adjustments on Form 1040. Partnerships will report on Form 1065, which is a return of partnership income. So today we talked about net and gross income. We discussed how to calculate these important metrics and where you would report them. Thank you for tuning in, and if you found this video helpful, leave a like and subscribe to our channel. And if there's a topic you'd like us to cover, leave it in the comments. And remember, call Northwest when you want more.